And once a month, the Tacoma FI Facebook group gets together, and that gather happens tonight. So I look forward to seeing you there if that's where you're going tonight. To give everybody a few minutes to get your questions into the comments, because the purpose of my content on Tuesdays is to answer as many questions as I can get to. The topic I'm going to start with is, are you willing to be rich? And it seems like some people aren't. They're just not willing to. I did a video probably a week or two ago titled How to Escape the Paycheck to Paycheck Life, How I Escaped Paycheck to Paycheck Life. And in it, I talked about some simple concepts of, first, I gave my story, which was not a lot of money, not a lot of income, a lot of bad debt, single parent. Because I think a lot of the challenges that a lot of us face, I had. Reached financial freedom in about independence in about 8 years, retired at 12, basically gave a Cliff Notes version of my story. And then I talked about some really fundamentals of financial literacy, that saving is not a way to become rich or wealthy, that money sitting in the bank loses value. I mean, we all know how inflation works, but saving is really is a two-part process. Increasing your income, talking about overtime, changing companies to get a raise, developing a side hustle, and then reducing your expenses. House hacking was an option, but for some people that isn't an option. Really basic stuff. And then I talked about investing and getting cash flowing assets. And I pointed out that before buying cash flowing assets, if you have debt that's above 6% interest, maybe focus on paying that off first, because your credit card companies are getting like a guaranteed return on the money that you owe them. Like the average is between 15 and 19%. So I was just talking about, no matter what kind of job you have. I mean, when I started investing, I was making $17 an hour teaching people how to drive trucks. I just got an entry-level job at a CDL school. So it's not like I inherited anything. From my parents, I inherited a 12-gauge shotgun from my dad and a 44 Magnum from my mom. And that's it. That's the totality of my inheritance. I still have both of them, but they haven't helped me reach financial freedom. So if you look at the book, The Millionaire Next Door, 88% of the millionaires that were interviewed were self-made. So 12% inherited a significant amount. It's possible to be financially independent because of what you inherit, but the majority of people do it on their own. I got some comments and some messages when I did that video. These are the fundamentals. Increase what you make, decrease what you spend, save and invest the difference, focus on high interest bad debt first, acquire cash flowing assets, and then once you hit the income snowball, get rid of all the bad debt. Super basic. I think I did that in just less than a minute, right? There was a couple of comments. One was, so your brilliant strategy to escape the paycheck to paycheck life is to get rich. There's a Marine Corps quote coming up, so cover your kids' ears. No screaming eagle dookie. That's the point. You're not going to escape the paycheck to paycheck life if you're not willing to be rich. And it seems like some people have a really negative opinion. My parents both did. We would work at places where there were people who had a lot of money. My dad ran a residential tree service. He talked down on anybody who made a lot of money. They either cheated the system, got wealthy by taking someone else's portion of the pie, because his idea was all finances, it's a pie, and everybody's trying to get their piece. And the more you take, the less there is for everybody else. That mindset follows people. And if you think poorly of people who have wealth, do you think subconsciously you're going to let yourself become wealthy? I'm not saying go cheat people, take more of the pie, but I'm saying look at finances like a conveyor belt. You take yours off, there's still plenty for everyone else. And sometimes the more you take off, the more there is for everyone else. Yes, you hear people say, well, you're buying up all the houses if you're buying one rental at a time, increasing the value so people can't buy homes. I own one house. The rest are all small multifamily. Not too many home buyers are looking for duplexes, triplexes, or fourplexes. So I kind of take that off the table. And then I look at I have 3 kids. They attended the school system. They went to public schools. I volunteered 2 days a week for most of their, from their, was it first grade to 6th grade, that bracket right there. I wanted to be involved with their school. But the average person owns a house or rents, and that one property pays property taxes, which goes to paying for schools. So I own 7 properties. I'm paying about what, 43, I have to do the math on this, 43,000 or so dollars a year in property taxes. The more rentals I have that I take care of, that I have cash flowing tenants in, the more property taxes I'm able to pay, increasing the amount of things that happen on the conveyor belt of finances. Try to change your mind from thinking to become wealthy, you had to take from someone else. I grew the truck driving school that I started working at. I started working there as a CDL instructor, just entry level, teaching people the skill that I knew. But I realized quickly that I had abilities to develop relationships with state agencies, military bases, prisons, anywhere where there was people coming out of that would need work. Grew the school from 1 location with 6 staff to 5 locations with 60 staff. I got paid more than the $17 an hour I was starting at, right? But my ability to grow the company, to become the evil, hated, wealthier person that my parents would talk about, created 60 jobs for the staff, ended up training, instead of 300 or 400 students a year, 2,000 students a year, helping companies get drivers to grow their companies. That mindset from that comment, when I made a video of here's how you escape the paycheck to paycheck life, very simple fundamentals. I didn't say, here's my crypto or my stock secret, and here's how you buy it from me. I would attack that person too. You should give the secret away and then sell the how-to. At least that's the way I look at it. If you are looking at someone who is wealthy and you think anything negative about that person, instead of, like our friend Cody Davis does from Cody and Christian Multifamily, find that person, find out how they did it, what they did, and find out what strategies or tactics they're using that you can apply to your life and your investing to make your life better. Then you're more likely to reach financial freedom, financial independence. And that doesn't mean you have to be like me, be super lazy and retire and never work again in your life. Some people want to be financially independent or financially free. There is a difference. If you want to know the difference, let me know in the comments and I will explain it. But some people want to reach that so that they can then work the job that they want instead of the job they have to do for the money. And imagine how much better the planet would be if people could do the jobs they felt like instead of jobs they had to. So, yes, my brilliant idea to escape the paycheck to paycheck life is to become rich. And that's what looked better in the thumbnail. Hopefully, if you're familiar with my content, the goal is to become wealthy. And there is a difference between rich and wealthy. It's not going to happen without you putting in effort. When I made the comment on social media that this was going to be the topic for tonight's video, I had a few people leave a smart comment saying, are you willing to sacrifice to become rich? Because that's kind of what it takes. One thing that's very important to me is that financial independence and financial freedom is not about being frugal forever. For a few years in the beginning until you hit the income snowball, yes. Drove old cars, didn't take vacations, like the normal stuff like that. Didn't go out a lot. Once the income snowball came in, to me, I never would have retired if I didn't think I could live the life that I wanted to and have multiples of that amount of income coming in to cover those expenses. I'd still be working. I wouldn't want a frugal life in retirement. I wouldn't want a frugal life for a long period of time while working either. It's mindset. Change the way you think of wealthy people. If you have been negatively reinforced the way I was by my parents, maybe friends and family that are talking about how the system is rigged. There is no way to become financially successful. The stock market crashes. There are people who retire with the bucket system using stocks that are preparing for recessions like this and still able to do it. There are people who start and grow businesses and grow it to the point where it's large enough to where they don't have to go in and work in the day-to-day. They can actually grow the business to a point where somebody else runs it, kind of like the truck driving school that I worked at. I don't know that the owners had been on a campus in 5 years. And their goal wasn't to buy the company to have another job. They were very smart. They bought a company to help a bunch of people and reach financial freedom by growing that company. I'm not an entrepreneur, so I'm not going to start and grow a business with that goal. I am not a stock investor. My strategy was very lazy. I wanted to, every couple of years, buy a rental so that within 10 years I'd have 5. Wasn't counting on, didn't expect, should have known that the income snowball was going to be a thing. And that when that kicked in, I had a couple more properties in less time, sped up towards the end, and made work completely optional. And my goal is to share how to do that with each person watching this. And I'm not saying duplicate my entire strategy. You might have goals like Matt the Lumberjack Landlord or Michael Zuber for one rental at a time of having a massive real estate machine that grows on its own. And that wasn't my goal. My goal was the most amount of cash flow from the least amount of units that made work optional. I should probably formulate a phrase there that actually puts that in a repeatable message. Haven't done it yet. So hopefully you understand that, yes, if you want to escape paycheck to paycheck, you need money coming in that you don't sell your life for 1 hour at a time. And by most people's definitions, that means that you're rich. In my definition, it means you're wealthy. So let me see if I can get to the comments. I see that Lauren, howdy, hopefully you make it tonight if you can. You became a member. So starting, I believe, next week after the lives, we're going to have member-only live streams. More kind of one-on-one, especially as there's not a lot of members yet. I might do like Michael Zuber does, where we do a shared Zoom that you could log into, or you could watch it live on a private members channel here on YouTube, or you can watch, or you can join the Zoom. Words are hard. Dividend Dave, howdy, from Winston-Salem. There's a lot of Salems. All-Nighter Hider, howdy, San Diego, checking in. Hypno, howdy. Laura, good evening, howdy. Brian, howdy, from the sleeper in your truck. So one thing I never did as a driver, never went over the road. Technically outside of the CDL school, worked for about 17 years as a commercial driver, but never called myself a truck driver. Tiffany, howdy. All-Nighter Hider, it really comes from the mindset first. The body doesn't do what the mind can conceptualize. For some reason, I saw like 3 different words trying there at the same time. Lauren, yes, you'll be there tonight. Awesome. I think, remember, you said E9, 6 p.m. I think it changed. You want to check the Facebook group really quick. I think it's not at E9. Let me make sure I've got the right place for anybody who's coming to the Tacoma FI meetup tonight. There is, the meetup is not easy to find. Not seeing it. If somebody could put in the chat that's in the Tacoma FI group, that would be great. And I should probably know where I'm going tonight. I know that I'm going sober. So tonight's actual sponsor is Mountain Dew. There were a couple of questions that came in that I'm going to start putting into my short live streams. Once in a while, I'm going to start making 15-minute live streams, because there are some people who won't even click on a video if it's over an hour long, which I totally understand. Not everybody wants long-term content. So most of my videos are 10 to 15 minutes long. So I'm doing some of those short live streams. Julie recently asked, when am I going to do a rehab? Because if you have watched any of my content, you know that I haven't actually done one. I've done tenant turnovers where I replace flooring and paint. So it's not quite a rehab. To me, a rehab would be changing the layout of the structure, removing or adding walls, doing cabinets. I have not replaced any cabinets in anything that I own. I've painted cabinets, sanded them down, but not put in new ones. A friend of mine bought a duplex and put in cabinets, and that actually delayed things by about a month. So to answer Julie's question of when am I going to do a rehab, I'm not going to do it unless I buy a place that needs a lot of work, Or if I have a tenant finally move out of a unit that's been living there for decades. I have some tenants that have been in place for 20 years, 20 plus years. So I don't plan on doing a rehab. I live in a market where it doesn't actually improve the rents very much. And again, the lazy. Yes, if I kick the tenant out or if I have a tenant move out and I spent a bunch of money, I could get higher rents marginally, not a lot. But to me, it's not worth the money. I like to provide safe, clean, functional rentals. I don't go for high end. I don't want to have high end things to replace. I rent to people with pets and sometimes small kids. Most of my damage has always come from small kids. So it seems like some people, like Matt the Lumberjack Landlord, likes to hold it to a certain standard, guts and replaces everything, knows he won't have to touch anything for years, and almost seems like he does it like he was going to live there. Not my plan. The other question that came in. So the Yoder, howdy. Angie, howdy. And Tiffany, you like the short live streams. I like them too. It's really hard for me when questions, because today, like I did a short live stream today, and there were questions that came up after. And I don't want to feel like I just can't get to them, but I'm trying to keep it to 15 minutes. I literally have a timer for that. Tommy asked the question, when did you buy your last investment property? When will you buy your next? Do you look every day? My last investment property was purchased in May of 2021. So it's been over a year since I purchased a property. My goals are very different than Michael Zuber's from One Rental at a Time or Lumberjack Landlord. I don't know that I want a bunch more units. The income snowball has kicked in. I am doing things to enjoy. I spent a couple months in Florida doing scuba diving. I'm probably going to be taking a couple trips with my brother. I went and rented Sea-Doos, went road quads. I'm trying to do things to spend money and enjoy life. But the money still piles up. Eventually, I will probably buy another rental. And it's not because I want more units or need more cash flow. It's like Matt says, it's the best use of capital. Leaving it in the bank doesn't make sense. I am making a video later this week on, there were two options I was going to talk about, but somebody popped in a good third option. Normally I can remember who said things, but there was a lot of comments. Somebody asked me, what would you do? Would you invest in a bond that pays 4% interest, pay off debt that has 4% interest on it, so like on a rental? And those were the two I was going to talk about. If the interest was the same, so you're either going to make 4% interest on the bond or you're going to pay off debt with 4% interest on a rental, which one would you choose? And the idea was somebody is in a market where they can't find a deal that makes sense. Somebody threw in, well, what would be the best option if you could do the bond for 4%, pay off the debt on a rental for 4%, or buy another rental that only produced 4% cash yield? So I'll make the video on which one of those three options. Zuber said he would pick the bond, and that's not the one I would pick. So will I buy another rental? Yes. And it will just be because I want to put the money to work somewhere. Do I look every day? No. Actually, I take that back. I don't look every day for myself. When I was in Florida, I spent a lot of time learning the market, helping a friend that then purchased a single family and then a duplex. And so they're slowly going to start building their portfolio. They also own a duplex in another state. So they're getting there. And then here in Washington, I've helped two friends basically handheld walk through, find the property, make the offer, close the deal, help with the repairs to help them get started. So I've technically been doing the work every day, just not really for me, not for myself. Millennial Mike pipes in. Howdy, thank you for that. Always being back so much. Support this channel and like his videos. Thank you very much for that, Mike. I'm looking forward to seeing you November 12th in Fresno, California. You are coming to the event that's going on there. Travis, howdy. Thank you for being a member of the channel. I appreciate that. Changing locks on number 1 this week. Awesome. You have a couple of choices when it comes to locks. Me and the Lumberjack Landlord did a video where we compare the two that we have. His, I think, are about $40 less per lock, his quick set. And from what he said, I don't think he's ever had any problems with them. I have done Schlag, and I get them for about $89. I look for them on sale. I look on Lowe's, Home Depot, and Amazon, and whenever one of them has a sale, I'll pick up 2 or 3 for the next time I need to put in locks. So I don't know what kind of locks you're putting in, but I recommend doing keyless entry, coded locks. Unless if it's a short term, you want it connected to Wi-Fi. If it's a long-term rental, I don't want Wi-Fi. I want long-lasting batteries. And I've had batteries in my Schlag locks last over 2 years because you engage the code, you put in the code, it engages the mechanism, and then the human turns to lock or unlock it. So there's no motor pushing out or retracting the bolt. That's what tends to kill the batteries. All-nighter hider. I'm a busy dude. I like 30-minute warning of a live stream. Nice. With headline, CPI at 8%, keep the 4% debt with a spread of 4%. Essentially, get paid that 4% to borrow. Very true. That is going to be part of the equation. The bonds can be tax-free, depending on what type of bond you get. If you hold it to maturity, it's like a guaranteed return as long as the municipality doesn't file bankruptcy. There's a lot of aspects to look at when you're doing that. And I haven't done this in a while, but to actually quote BiggerPockets, they had a really good episode that just came out. And they were talking about a new book that came out from Jay Scott, and I don't know the other guy's name, but he also works for BiggerPockets. They did a combination author to make this book. But they were talking about, they actually said in the title of the video, I think it said something like, be a real investor, cash flow doesn't matter. Like it was some version of that. And I thought, wait, cash flow doesn't matter. If it wasn't for cash flow, I'd have to work, right? So this is how I look at it. But I watched the video, and their underlying message was, you can't tell if a deal is a good deal or a bad deal unless you know what your goal is. And that made sense. So when it comes to the bond, pay off debt, or buy the property, what is your goal? There are times, write this down because I'm never going to say this again, probably. There are times yield doesn't matter. Some people are just buying cash flow, and they are not looking at their cash on cash return. It becomes a word that we use in the industry because we're trying to figure out the math to figure out what's a good deal. But if somebody is just looking for cash flow, they need a certain amount of cash flow, and they have the capital to invest, does the return matter? All-nighter hider, do your locks also incorporate keys as a backup? Yes. 12 years, never touched a key. Don't even know. I'm sure they're in a box here somewhere. So the idea is you have a key backup and a coded locks. 2 exterior doors that you put the coded locks in. The odds of both batteries dying at the same, because they make long sounds, they make squeaky sounds whenever the battery starts to die. You get a couple weeks warning. And if one did die and they just couldn't get in, there's the other door. And then they know to replace the batteries. So I've never actually had it happen. I do have it in the leases, and I kind of give a short Dion talk when I'm talking with tenants about their responsibility to replace the batteries. It's one screw, it's right here. It's these 9-volt ones. I leave one there for the first year for replacing. Haven't done it after that because the tenants take care of that. So there are keys. The locks do come with a key. I've never given the key to a tenant. I keep the key myself, and I've never had a tenant lock out. And I don't have to go to the property, like worst nightmare that a landlord ever gets. I've had it twice this year now. I have a septic problem at a house, right? End of the world. This is the reason why you don't want to own rentals. 3 texts, pays to network. I know a guy who owns a septic company. So I think we had like 3 or 4 texts today. He's going to go fix it. If for some reason he needed access into one of the buildings, and this is an issue the tenants are aware of because there is drainage problems, I don't have to meet him there. I could say, which unit are you at? Okay, great. Here's the contractor code for that unit. And then the next time I'm there, I switch the code. And some people say, oh, you would share a code to one of your units with a contractor? Take a note. If you think a lock will keep a contractor out, you need a new contractor. Lost my point here. But it's some all-nighter hider, you are right. Where CPI, where inflation is, does impact what looks like a better investment to me too. Millennial Mike, hoping a bunch of you folks show up November 12th to the first one rental at a time live event. Fresno, Dion is speaking, I believe. What more reason do you need? And Beth Traverso is going to be there, and Millennial Mike's going to be there. And oh, here's a thing for the old people in the room. It's Romper Room. I see Mike, I see Beth, I see Cody, I see Christian, Zuber, and I think some surprise guests. All-nighter hider. Sovereign bonds won't get defaulted on when the currency can be debased, hence risk-free. In this environment, long bonds are known as return risk-free. Now, sovereign, yes, from federal level. Mike Jewell, howdy. How is Brazil? Dion, do you have a way of investing your reserves where they are still available for repairs? No. Not only my reserves, but my investing funds are in a low interest account. Depending on where your bank is, Mike, you might want to figure out, what is the, if you're in Brazil, are you using a bank that has FDIC insured up to 250,000? There's another term that the lumberjack landlord used with smaller banks. Sometimes they insure up to any amount. So it's not quite FDIC insurance, it's something else. I probably could think of a way to invest my reserves because I keep 50,000 now that I'm not working. When I was working, I was keeping about 30,000 as reserves, but not working, I increased that to 50. I could probably put that to work somewhere because I've never touched it. So it probably should be working. But I don't want my investing fund money above that's going to be invested in the next deal making any kind of money. I want that kind of irritation because it's all mindset at the back of my mind saying that money is not producing anything. You should find a place to put it to work, prompting me to get the next rental. Here's an example, and this will be a video coming out in a couple of weeks on how important mindset is. Do you know why companies do take it home now, pay later? Years ago, we used to have layaway where you would pay in the installments because you didn't feel it all at once. And then you acquired the thing. Once it was paid off, you could take it home. Well, now they have, you take the thing home, you get so many months interest free. And this is the mindset from somebody like my nephew, who will never use a credit card in his entire life, has a debit card, but only uses it at ATMs to withdraw cash, doesn't trust the interwebs, and everybody's going to rip you off. So that's his mindset. But the mindset that's working for him is it's cash in his pocket. When he buys something, he feels the money leaving his hand, the amount in his pocket getting smaller. So he's more resistant to spending money. The easier we make things, the more likely we are to do it. So my strategy for investing is to make it easy. Everything is automated. Everything is auto searches, auto payments. Have two handymen, to invest in properties that help limit tenant turnover. So I'm not dealing with that a lot. I'm not looking to buy a whole bunch of units. It's all these things to make my investing easy because I'm lazy. And I'm not an entrepreneur. I'm an investor. Well, my nephew's the same way when it comes to money. He lives a very frugal life, but not because he's frugal, but because he knows that his mind will feel pain when he spends money. So if you're using credit cards, and then you pay it off before the end of the month, you don't feel the expense right now while you're using the credit card. You're on Amazon, you're just clicking buttons. It's very easy. You don't feel the money leaving your physical hand. Now take away the credit card where you don't pay it back every month. You're paying the minimum payment every month. So you can spend $3,000-$4,000 and make a $200 payment on your credit card. You only feel $200, even though you spent $3,000 or $4,000. That we're making it easier to spend money. I want to make it frustrating that the money's sitting in the bank, not earning money, because my mindset will be, I want to put that money to work. So it's a good idea depending on your reserves, and especially if you have the cash flow to handle, which is probably why you're pointing out a flaw in my investing, Mike, where I should put at least the money from the reserves to work, because other than one time when I was purchasing, I think one of my biggest, my most expensive property, I used the reserves to do it, and I've broken that down in a video before. Alan, howdy. The event is already sold out. The one for the 19th might not be. I don't know if I'm going to be at that one. I know I'm going to be at the one on the 12th, but the Pace Morby and the bigger event that was going on with the, like, more than one rental at a time was moved to the 19th, and that's probably sold out by now because it went up live this morning. All-nighter hider, howdy. I'll be there, Mike. You'll have the opportunity to meet me. Nice. Angel, howdy. How many years did you do trucking? So got the license in 95, 96, 94. Yeah. By taking a written test. 105,500 pounds of hazmat driving down the freeway because I passed a written test. It was beautiful times. Drove for a while around 2000, got into law enforcement, and driving became part-time. 2008, recession hit, got laid off, went back to driving for a little bit with Oak Harbor Freight Lines, and then they went on strike, and then I went to the CDL school, and then I was there for the last 13 years. So 20 plus years with CDL. I still have my CDL. I'm probably always going to have it. For me, I think I'm going to keep it because a friend might call someday and say, hey, let's take this truck of cars to Maine and just go have a week. To me, it'll be a fun trip. I don't know that it'll be for money. I'm Mike, excited to see you there. Go Eddie of 5. Howdy. What is a JDA letter? Potential tenant said they're guaranteed by the state. Any idea what this is? Doesn't sound familiar. I would have to Google it. JDA, no, it's not ringing a bell. Could be specific to your state. I almost want to say we should just Google it. But JDA letter, there's too much research that would go into knowing exactly what the tenant was talking about. I would need some context. Says it's guaranteed. No clue on that. Sorry, Loco. All-nighter hider. If you believe in locks, go watch The Lock Picking Lawyer. There are a couple of my videos where at the end, I teach people how to pick locks. I have a couple of really nice sets. Practice locks that are clear so you can actually see the tumblers inside to learn how everything works. I point out the flaw in almost every TV show that you watch when they pick it with one pick. Eli, howdy. What company do you use for title insurance? So depending on the county that you're in, there are Naples, Florida, the buyer picks the title company, and the rest of the state, the seller picks the title company. In Washington, I've never picked the title company. It's always been picked by the seller. So you'd have to find out what the local format is on if you pick it or if it's picked. I know that I don't want to name them. I'm not actually going to make the joke and name them, but there was a title company who made a huge mistake and literally filed everything wrong. And the IRS came to me and said, oh, you owe us $44,000. The title company fixed it. So there is definitely some good companies out there that when they make a mistake, they fix it and they take care of it. So Eli, it would depend on, do you get to pick, or does the buyer or seller get to pick, and then where are you located? Here in Washington, I've worked with Ticor Title, Chicago Title, literally Olympia Title, like the name of the city that it's in. Yeah, so haven't really narrowed down just one to work with because I haven't had the chance to pick. And I suppose if I ever sold a property, I'm trying to think which one I would pick. I had good luck with Chicago Title. But Ticor was good too. So all three of them, I didn't have any problems. I'd probably call them and ask what their fees were as far as the seller goes and see how that worked. Dividend Dave, are there schlag locks that don't rely on Wi-Fi? Yes. I don't know of schlag locks that need Wi-Fi. I will, after the live stream tonight, Dave, I will leave a comment in this video. I'll probably just text you too, but I'm going to leave a comment in this video for people here with the link to the locks that I use so you can check them out. And they don't use Wi-Fi. Ninja Vanish, howdy. Thanks for answering questions. Thank you for asking questions. These questions are great. I was really excited today because I did a short live stream. Like the Tuesday ones, I think I have a topic, I talk for 10 to 20 minutes, and there's plenty of time to get a couple questions going. And then the goal is to get through them all before it's time to take off. The lives that are 15 minutes, for YouTube to like announce, for people to see it, to get logged in, to put in the question, the first one was kind of spotty. Like it was, you know, it was kind of new. The viewer, person watching, didn't even know, oh, I'm supposed to put in a question because I only had 15 minutes. But today I had some questions ready and didn't get to them because great questions just popped up during the live. So I'm hoping that that continues on the short live streams. If that continues, I'll probably do more of those. What I would really like to do is do something like that almost every day, just to get to questions, because I know people have them randomly throughout the week. Alan, howdy. Hi, I'm here. You got me. Let's discuss verbiage for the binder strategy for those of us that can't meet tenants in person and need to implement the strategy via text or email. Thank you so much for reminding me. Generally with email, you can actually send screenshots. So you can do this with text too. Remember, the binder is you're trying to, it's in my truck because I made the video with Beth. So I don't have a copy of the binder here, but you want to send information on the property. So you could just send the link. You know, here's the property. This is what the current estimate is, and have all the information the tenant can look up themselves. So you're literally going to put that in the text. The next thing is a screenshot of, and you can text this too or email, of the rentals for rent in their area so that they can visually see this is in the same school district, this is by the same park that they like, this is by the lake that they're by, whatever the format is for you know how they drew their investing circle, how far it is from their job. And then several pages of the rentals in the area that are available and the amounts, and make sure they have the same number of bedrooms. Bedroom count is more important than amenities. People won't look enough in depth to see amenities, but they will see 2-bedroom rents for this much. And then I highlight how much they rent for, and then it's the same number of units, 2-bedroom, 3-bedroom, 1 bath, 2 bath, whatever. And just start the conversation with, you know, especially if it's, you know, you're not going there in person. If you can go there in person, I think face-to-face is generally better, because you can read facial expressions and know when to say certain things and not to. But in the text, you're going to say almost the verbiage from the binder strategy itself. Your rents make sense to the person who owned it before me, who bought it for X amount of dollars. Based on the new value, it's going to impact my property taxes and my insurance for cost to replace. Here's what rentals in your area are going for. This is what your rent is. I'm wondering what you think is fair. Really simple. Try not to overthink it. The video that I made the other day with Beth's been investing for 20 years or more, has 19 rentals, is an agent that I think has several agents working for her, right? Like, so she's really in the industry. To do the binder strategy, she still kind of said, hey, I'd like to see the binder. I'm failing at putting the strategy into simple enough terms for people to understand. It's kind of just 3 things. Here's what the property is, the information they could find on Redfin or Zillow. Here's the map of the rentals, and here's several examples of those rentals. What you're doing is you're just showing the tenant, here's what rentals are going for in your area, kind of like comping a property when you sell it, right? You're comping the rents. And then you're explaining, I don't want to kick you out. The tenant will realize this is how much you can get if they do leave. Like I told a couple of tenants the last couple of times saying, hey, I don't know if you want to renew. It might be better if you moved, because this is what the rents are in the area, which sets expectation management so that when they realize I'm not trying to get that full increase because I'm not having to rehab the place or find a tenant, screen a tenant, place a tenant, then I'm willing to take less. The conversation goes a lot better. So via text or email, don't overthink it. Those 3 things: property details, map of the area, several examples of rentals and what they're going for in the area. And then you're just saying, this makes sense for what the prices used to be, who used to own the property. Here's what current rents are. What do you think is fair? You'll be surprised. That's how Matt does it, the lumberjack landlord. He kind of has always done it through. I've done it through email with the Section 8 program with success. They sent me an email saying $1,800 was the most they would pay. I sent several comps saying, look, here's $2,300, $2,400. All I'm asking for is $2,200. They agreed. After having sent an official email saying this is the size we'll pay, I'm not saying that might be your experience with Section 8, but if you do the work for them and you say, look, here's the examples you can show your boss as to why this new rate is going to be, maybe it'll work there too. Holding reserves comes with opportunity cost. I agree. That is why I talk about reserves kind of based on the size of your portfolio. When I had 1 to 7 units, I kept $10,000. Anything more than that should be going into work to create the next asset that's producing cash flow. Once I had more than 7, I raised that to 30 while I was working. So more things can go wrong that I wanted to cover. And then when I quit working, I wanted a bigger cushion, so I raised it to 50. So yes, there's $50,000 sitting there that I can't invest, don't want to invest, keep for emergencies, like a septic problem that took me a whole bunch of texts today. 3, maybe 4, I should check. There is an opportunity cost, but there is a swan effect. You can sleep well at night if you know those reserves are sitting there ready to handle a problem. And my chat moved. Lars. Howdy. Hi, Dion. I'm looking for a second rental. However, I am having a hard time finding properties that cash flow. Do you think single-family house values will decrease more than interest rates increase in the next 12 months? So, no one has a working crystal ball. If interest rates go up to make prices come down, which is not technically what usually happens, the last time interest rates doubled, home prices tripled because wages set home prices, not rates. And the biggest impact we're having right now that completely throws off the affordability index and everybody going, housing is unaffordable, is remote working. There are people that are, we're living in Seattle, where you can make 6 figures and you barely can afford a $3,000 or $4,000 a month payment for your rental. But you move down here to Tacoma and all of a sudden a $600,000 house is cheaper than the apartment you had in Seattle. And you can work from home. So, and that's happening everywhere. And you'll talk about very remote places where properties are $50,000 to $100,000. Someone moves, they sell $1 million house and move there and pay 3-4 times what the regular houses are for, and they're getting a deal. So I don't know that home prices are going to come down. I do know that if they go down 25% from the peak, 25% decrease, we're still above 2020 levels. So anybody who's been waiting to invest is making a mistake if their plan was to invest. First, you said, Lars, that you can't find a deal that cash flows, and then you mentioned single family houses. In 12 years of investing, I have never seen one ever single family house in my area that would cash flow as a rental. I have one single family house that I purchased in 2000 to live in, to never be a rental, and then turned it into a rental. So it cash flows because I've had it for 22 years. But since I started investing as an investor around 2010 to 2012, I've never seen one. So house with an ADU, you get single family house lending, but you have 2 units like a duplex, small multifamily up to 4 units, unless you have the VA loan, and then up to 5 units, but you can get residential lending. Multiple units might cash flow better. And then if you know something like the binder strategy, it's a lot easier to find a cash flowing rental from the MLS if you know what you can get the rents to with reasonable confidence. A lot of listing agents will tell you, nope, you go off what the rents say they are in the listing or even less, because that's usually pro forma, where it's basically, technical term is made up numbers. What asset class is working, and are you connected, Lars, with one of your local REI meetup groups where you can find out, because there is some investor in your area investing successfully, and it might not be in single family. But if it is in single family, is it something like buying a split level house and dividing upper and lower into 2 living quarters? Is it buying a property that has a built out basement as a separate apartment, so you have multiple streams of income? So I wouldn't project what you think is going to happen to prices or interest rates. Look for the deal that cash flows every day, hunt until you find it. If your goal is to add a rental, right? And you might find it tomorrow, you might find it in 2027. So it's not that you're trying to time the market. You're doing what I call a version of dollar cost averaging. You save the money to invest, you hunt for the investment, and then you buy it when you find it. So instead of on a periodic point where you invest the money, you invest the money when you find the deal. It sounds like in your area, you might look for something different than single family houses. All-nighter hider. David Dillard has a great presentation on the mindset of saving. Awesome. So does Minority Mindset. Ash, howdy. Hey, Dion, if you had to invest outside of Washington, where would you invest? So if I had to invest outside of Washington, I would probably do a version of house hacking, so snowbirding. So I would look for a warmer climate. Small multifamily in Arizona, New Mexico. There was a place in New Mexico that a friend of mine was looking at remotely where the numbers were good. Right now, I don't know that it's the time to invest in Florida because to me, it would seem very predatory to go down there and say, hey, I know you're going through a big, huge tragedy. Well, let me buy your house at a discount because it's messed up. That's messed up. It's a strategy, but it's just not what I'm going to go with. I would stay out of the coasts. I wouldn't invest in California or Oregon. I wouldn't invest in New York, New Jersey. A lot of people talk about the taxes in Texas being a problem because they're reassessed every year. Well, Washington State does the same thing, as long as you can calculate for that. But I think I would find large cities and then kind of draw those like concentric circles going out from the city until you find a place of equilibrium where rents and prices kind of balance out to where you can find deals that have a good yield. You're going to take 60 to 90 days to learn the market. But so what I'm doing now is talking about everything that you hear from everybody who talks about investing in another state and missing the one thing that's the most important. Where do you have someone living that you trust or that you're willing to move to learn the area? I would live in New Mexico. I would live in Arizona. I might live in Florida, but it's kind of like, to me, Australia, everything's trying to kill you there. So I don't know that I would go to Australia, or not to Australia, to Florida and purchase to live. But where do you have someone that you trust? And I have friends that live in Arizona, so I'd probably invest there. I don't really know anybody in New Mexico that I trust, but it might be a place to move to for several months to learn the markets and invest. But that's, if I had to invest out of Washington, that's probably where I'd be looking. I have no interest in the places that become Siberia for some of the months out of the year, or where if you get locked out of your house between like November and February, you pretty much just die because you freeze to death. No interest in that. Yeah. So I'm investing based on where I would want to live, which is probably a mistake because somebody will rent anything. And that's the goal, is to rent it out. James J. Howdy. Hi, Dion. Is there an advantage to writing out a full-term 15 or 30-year loan as opposed to paying off your mortgage early? Do you lose any tax advantages if you pay off your mortgage early? Thanks. So you lose tax advantages, but I don't know that that's a bad thing. If you're paying $1,000 in interest and you're in the 30% tax bracket, it means you get to take $1,000 off of your rental income, saving you the $300, 30%, right? So you're paying $1,000 to save $300. So I would never have an investment for the tax benefits. Take advantage of the tax benefits while you have it. You still get to depreciate a property even if it's paid off. So the depreciation schedule has nothing to do with whether you have a mortgage on it or not. There's a lot more to it than the math. My goal was to get to 4 mortgages because at the time, between 2013, 2016 or so, lenders would only let you have 4 in your name. And I figured they knew more than me. That was probably a reason. They had just gone through, the whole industry went through that 2008 housing crash. So if 4 mortgages was a safe one, and that's how many you can have as a residential, I got to 4, focused and paid off one that met 2 things. The income, the debt snowball, and the debt avalanche. It was my highest interest loan with my smallest amount on mortgages. So I paid off the single family house. Then 2 things happened. You can have 10 loans in your name, 20 if you're married and 10 in each person's name, and interest rates dropped a lot from where they were. So my goal then was to get to 10 mortgages, and I got to 6, and the financial freedom that came from 6 is enough to where I might have stopped. Now I'm just going to add another because the cash flow's got to go somewhere. I don't know that I would ever pay off low interest rate debt again. If you have a mortgage that's under 5% interest, it generally makes more sense to invest in something else. I was talking earlier about a video that I'm going to be making coming up sometime soon, James, on would you buy a bond that pays 4%? Would you pay off a mortgage that is at 4% interest if you couldn't find a deal? And somebody came back with a third option of, or buy a deal that's only going to get you a 4% cash on cash return. So I'll be making a video on which one of those I would choose. It's not my goal to ever have a paid off property. Like, I just did it because it was the number of mortgages. That's what I was looking at. Tenants will pay off the mortgages just fine. And I don't care that they're paid off or that there's debt on them. I'm looking at cash flow. Does my cash flow support my lifestyle, give me money to invest, give me the ability to rebuild reserves when I have a major event like a roof or a foundation or something like that, or go on a date, but nobody can afford that. And as long as you get the cash flow, I would do a 40-year mortgage. I would do a 1,000-year mortgage as long as the cash flow was there. Your cash flow will increase when the mortgage is paid off. So sometimes it can make more sense. And I don't want to give away too much of what's going to be in that video, but a bond that pays you 4% every year, you're adding 4% to your income. A mortgage that you're paying 4% on that you pay off adds to your cash flow. So sometimes it makes sense to do it because you're adding the principal pay down and the interest to your cash flow. So like the BiggerPockets episode I was watching earlier today, your situation and your goals can tell you which is the best way to go. No one can say, this is the best thing to do, pay off the mortgage, or get as much debt as you can and leverage as much as possible. None of that is ever right. When I was growing, I wanted to be at about 70% loan to value so I can grow more and gain appreciation on multiples of what I invest. Now that I'm retired, I want to keep around 50% loan to value so that I have a more secure position and I'm not trying to grow. So yeah, I wouldn't keep a mortgage for the tax benefits, but while you have the mortgage, use the tax benefits. Depreciation happens either way. And what is your goal? Would you sleep better at night if you had a paid off property, or if you had 2 properties, instead of paying off the mortgage, you invested to buy the second one and you had more cash flow? Which one of those sounds better to you? That's the right answer. And then I see Vatsal. Howdy. What would you do if a realtor you didn't like that brought you a property? You date the agents, you marry the property. It depends on why I didn't like them. Generally, if I don't like an agent, it's probably going to be, and are there agents I don't like? I don't think so. They would have had to have screwed me over on a deal in the past, been non-responsive. But if you're in the industry like Matt the Lumberjack Landlord, who has 130 units and is like well-known in the community, he recently did a deal with an agent that he kind of hated, that ghosted him and then came back with the deal. And I believe he closed on the deal. So yes, I believe I would, even if I didn't like him. Quote for the day. Holding on to anger is like drinking poison, hoping your opponent dies. So even if I didn't like them and I don't want them to make profit, if the deal was good enough, I'd still pursue it. That is as deep as I ever get. Price and pride. Howdy. And again, Fadsal, thank you for that very much. I appreciate it. New Schlag locks are dope, and I have Bluetooth capability to open with your Apple Watch phone. Beautiful, especially if you have short-term rentals. I think that's pretty cool. I don't do short-term. I don't think I have any current midterm. I've had midterm in the past, but no, everybody's long-term now. Actually, everybody right now is on at least a year lease. That means I can literally just go to sleep for the next 11 months. Jay Hayes. Howdy. You said you were interested in reading about other types of investing once. Try reading this book. It's light on the math. The Unlucky Investor's Guide to Options Trading. by Julia Spina. And I'm going to take a picture of that. I have a rotation of things to listen to. I won't listen to it because I recorded it, but there's books on real estate and finances, but then I also listen to non-educational books. But that one sounds interesting. I will check that out. Cheers. Matt, the lumberjack landlord. Howdy. Hit the like button for the man. He earned it. Every time you hit the like button, an angel gets its wings. Trucking landlord. Howdy. Does DIY cost segregation raise red flags with the IRS? Great question. Well, they're stay away from politics. Reminding myself. I think anything that you do raises red flags, but as long as you're doing it right, I would still say it's worth it. It might, what do they do? Spur one of those things called an automated audit, where it verifies your information on another tier, but it's not like a full-blown 6-month audit or anything. So I'm not the guy to answer that question. I've been audited once by the IRS, and it was a 6-month process. I still haven't done cost segregation, so I still somehow hit their radar. And all I found out in that, I should do a video on that. In that, all I found out was there were write-offs I wasn't using. And I learned a lot in that at that point. Things like depreciation schedules are considered utilized no matter what. You take depreciation or not, they think you did. So depreciation recapture is going to be the full amount that you could have depreciated. So sorry, trucking landlord. That's not one I know for sure. Dividend Dave works in the industry, though. Maybe reach out to him. He might know. Joey, howdy. Do you have time of the year that you like to start new lease terms? Summer, beginning of school year, etc. So I try to stay away. It's a great question, Joey. Thanks. I try to stay away from agents say you want to list on a Thursday, or it's really hard to find a tenant in December. What I try to do is not have all of my leases end at the same time of the year. And it's not because, well, they might not all renew, and then I got to find 10 tenants all at once, right? Or 16 tenants all at once, whatever the number would be. It's because when you go to do a lease, or not a lease, a loan from a lender, there's a progression to how they look at your income. So before you have a rental and you have rental income on your tax returns for 2 years, you're the Bella at the ball. You're the one they look at. Your credit score, work history, debt to income ratio, salary, like how much do you actually make? All of those things, they're really looking at you, right? Once you have rental income on your tax returns for 2 years, they'll start looking at the rental income, 75% of the rental income from your rentals in your debt to income ratio. At some point, if your ratio gets pretty close and you're buying a big property, they might need to look at the rental income from the property you are purchasing. To do that, the lenders I worked with said, we need the majority. So I'm thinking 51%. They didn't give me an exact number, but they said the majority. So not all and not just some, but the majority of your rentals to have at least 3 months remaining on leases on the majority of your rentals. And then they'll look at the rental income on the property that you're purchasing in your debt to income ratio. If all of your leases were due in November and you wanted to buy in September, you don't have 3 months remaining on your leases. But if they're kind of spread out, so what matters to me is that they're not all at the same time. I have 16 leases. Is that true? Yeah, there's 16 leases. There's a roommate situation, but they all have one lease. So 16 leases, and they just don't all happen at the same time. I've placed tenants in December, took 4 days to find. I've placed tenants in June, and same thing, tons of demand. Millennial Mike one time talked about investing, looking at the school districts. We've all heard, we invest where the school districts matter, right? He's never had a tenant rent it because of kids, right? So School time can matter. If that, to be very clear, I should have started with this. If you live in Siberia, like Matt the Lumberjack Landlord, where you can die for 3 months out of the year if you get locked outside of your house, it's probably harder to place a tenant in the middle of winter. I live in Washington State, where the rain's a little different in the winter than it is in the summer, right? So nobody's going to die. I have had no problem placing tenants. So know your area. If it gets really super wintry cold and it would suck to place a tenant, maybe don't have leases that end in the winter time. So if you have somebody you're going to place in December, maybe you give them a 6-month lease or an 18-month lease, and know your local laws. Sometimes if any lease is longer than 12 months, the tenant signature has to be notarized. And then I see that Emily just became a member of the channel. I appreciate it. Welcome to the group. Starting, I think, next week, there will be a members only live chat, which could possibly be a version of Zoom that you can join, or a private members video on YouTube in case you don't want to join Zoom to be a part of that. Here we go. I lost where I was at. Lumberjack landlord, trucking landlord. Nope. Did 2 myself last year. Good. Joey. And yes, smash the like button. I would appreciate it. All-nighter hider. I like the advantage of tenant consent, a rent increase with the binder strategy. It's consent. That's probably the best way to put it. The way I always put it is they asked for the increase. They pitched the amount of the increase. So it's not only consent, it's they were a part of the conversation and they know what they can afford. And not only what they can afford, but what they're comfortable with. The Yoder, 67 watching and only 5 likes. Come on, smash the like button. And we are now at 49 likes. So it's definitely changed since the beginning of that. Thank you for that. DB, howdy. Dion, thanks for your guidance over the last year through your videos. I was able to sell my portfolio, 5 properties off market, put money away for kids' college, pay off a car, start my new business. Awesome. Cool. It sounds like you did the backwards Dion strategy. I love it. Trucking landlord. Thanks, Lumberjack. I'm a bit paranoid. Lumberjack to trucking. They look just like regular cost segregation, just smarter and faster and less expensive. Yes. I think the DIY one, Matt, was like $500 or something versus the $2,000 to $3,000 to have a person do it. Joey, what's your preferred source of current market rents? There is a video on my channel called Setting Rents in a Hot Market. In a slow trajectory rent increase like we had from 2015 to 2020, rentometer was pretty decent in my area. You could even use the 1-year history, historical value info. But even at the 3-month increment now, it's 30% off low in my area. So I switched to literally spending a couple of weeks learning the rent in my area. Zillow, apartments.com, Craigslist, Facebook Marketplace. I didn't make a spreadsheet or anything, but I would watch properties and I would go, okay, this many units, this many bathrooms, this many bedrooms. Is it single family, townhome, small multifamily, apartment? Because in some areas, different things rent for more. In some areas, a garage is more important. In my area, carports rent for more than garages. So it just depends on knowing your local area, studying it kind of constantly. I would say I look at rents very closely when I have a tenant turnover, and I'm going to use the binder strategy. I look at rents very closely when I'm making offers, in which I generally make an offer a week about, it seems, because I'm not really working at buying the next rental. Last year, it was 2 or 3 offers a week. So it depends on if you're in growth mode or relax mode. So it's like I'm trying to rent a rental in that area myself. So instead of using Rentometer, I would go to the places I could find rentals at and then watch. Just because you find rentals at a certain amount doesn't mean that's what they are. If they're listed at 2,000, but it sits on the market for a month and a half, that's too much for that number of bedrooms. So how fast do they come and go? And then if you know your area, kind of like in Washington, hometown something or other is run by mentally challenged people. So if you have a 3-bedroom rental in an area where they rent for $2,000 to $2,400 all day long, that place will list a 4-bedroom for $1,500 and just let their people who own the property probably lose the money. So you just wait a couple of days for that to go off, and then you get your average off of the other rentals. My personal experience for Thurston County, Washington. Laurel, hey. Are there any Tacoma 5 members that tonight let me know where the meetup is? Okay, so I apologize, everybody. Let me take some time really quick to actually find where the meeting is tonight. I should have known. I think it's at the Rock restaurant. There should be an event thing here in the Tacoma FI. So if you're on Facebook, there's a group called Tacoma FI, and we meet once a month. And I'm not seeing the event. Why am I not seeing events anywhere? There we go. Tacoma FI, the Rock wood-fired pizza. You ready, Lauren? 1920 Jefferson Ave, Tacoma. The Rock. That's what it's called. There. So I found it. Sorry, I didn't do that faster sooner. Bill O'Connell, howdy. Do you make adjustments for the less turnover and little less than area average rents price because they are getting you a good deal, you get no turnover? So it's a part of the binder strategy. My rents are a little below area average because no one's ever asked for the rents to go up to the rentals that I found. They know that that would make sense if they moved out and I spent $5,000 to $10,000 on a rehab. That's the rent I would get. But with them staying in place, me not having to do a rehab, I'm usually 5 to 10% below area average. And it helps limit tenant turnover. Several strategies that I have for limiting tenant turnover, which I probably won't list here. I have a video on my channel called How to Keep Your Tenants, How to Limit Tenant Turnover, and it lists out all of the strategies that I use to do that. But rents a little bit below is one of them. If a tenant moves out and I do repairs, like I just had a tenant that moved out of the area, so it's my 4th tenant turnover in 10 years. I did flooring, paint, minor upgrades, all the electrical, just the basics, really, literally the basics. And I'm getting area average rents. So I'm not below on that one at all. It had good cabinets though. I was shocked. It had granite countertops and Slowco. So I got really, I'd never been in the unit before until they moved out. And I was told during the inspection that it was a single bedroom with a den. And when I went in, it's literally 2 bedrooms. So that was a win. All-nighter hider. Why doesn't Millennial Mike have a wrench? Oh, because he's not the porn guy. Yeah, so I guess, yeah. Millennial Mike isn't here all the time. And I gave that, Lumberjack has that so he can block the porn advertisements that come. Ash, thank you. All-nighter hider. Hey, Matt. I sent the video covering the HOA covenant I asked you about the other day to Dion. I'm not advocating for anything, just interesting concept that may be a tool in the belt. Agreed. Angel R. Would you pay a 1.9% car payment loan? So this is to steal from the idea from Rich Dad Poor Dad, the books way over there. Have an asset pay for it. I don't care what the interest is on the loan. It's the best loan that you can get. It makes more sense to me I have a duplex. I purchased a duplex. I call it the vehicle duplex. It was cash flowing a little bit under, I was on $800 when I first got it. So every month, $800 went into the account to buy the next vehicle. Now it's cash flowing about $1,400 a month. So my next vehicle, which will probably be in 5 years, I just bought a pickup. So in 5 years, I'll be buying the next vehicle. All of the cash flow from that one rental is going to go for it. At the time, this is probably what will happen. There will be a lot, 1,400 times 5 years, whatever that is, 60 times 1,400. So a lot of money. I'll probably go, look, I can go buy this car. Or I could buy this duplex with this amount down, and then I could take that payment, like adding another duplex, because it's just too easy to buy another asset, and then make the payment cover the car. As long as the cash flow from the unit covered the cost of the payment, I will own the asset, even though I already have one. The cash flow just builds up. I'll buy it, and then I'll go, okay, so these are now the payments paying for the car. This is the one saving. It's a snowball. It's really where the income snowball comes in. So yes, 1.9% interest on the car seems like it makes more sense, so that you could take the money, put it to work on the asset to get a 5 to 10% return on your money, and then use that money to buy the car. Really comes down to also the type of car you want, how much money you make, that kind of thing. My first 5 years of investing, my cars were 18 and 22 years old. It wasn't until 2018, 2017, no, 2018 that I started getting nice cars. And that cycled through one a year, basically, from Corvette, Ford Raptor, Tundra, F-250. Yeah. Dividend Dave. Dion should invest in North Carolina like his homie Dividend Dave. And there you go. So I know someone in the area now. Josh, howdy. This might be a long question, but others might find it interesting. I hope so. I currently have 3 rental houses. 2 of them are paid for in cash. I have 4 other houses that are vacant. I need a large rehab in the range of $60,000. I am currently rehabbing one of the 4 using cash flow from the other rentals in savings. I plan on finishing this rehab, but have questions about the other 3. With the housing market starting its slowdown, should I save up and buy another house, or should I rehab the other 3? It's not that that's a long answer. It's really, what are your goals? Do you want cash flow or more units? Because you get more units from recycling cash flow, and then you get exponentially more cash flow a decade down the road, but you don't get the cash flow now. That is a good question. Email me and let me try to give like a good detailed answer if I can on that, on what I think, but I don't know your market, so I don't know if you'd be able to find the deals. When you say that the housing market is cooling, it is in transactions. The number of deals happening is less. We're still up price this year over this time last year, so you didn't save any money by waiting a year to buy now. They could come down, but I think interest rates are going to go up significantly, and we have no guarantee that they're going to come down in 3, 5, or 7 years and you'll be able to refinance. So that's a gamble. Yeah, that's a long, detailed question that I'll probably have a bunch of questions on. So Josh, I put my email in the chat. If you could send me, we'll have some back and forth on that. Jeremy, howdy. Just need one more house this year. So yeah, I didn't answer in totality the question of when did I buy my last property? When am I going to buy my next one? I generally buy, so all but one of my properties I bought between November and February. So in the winter, when it seems like for some reason people stop shopping and there's less competition, I found almost all my deals. Mad76, howdy. Hopefully you are enjoying the audiobook. All Nighter Hider, Angel R, keep it. At the end of the loan, you're paying the same monthly amount, but with cheaper dollars because of inflation. That is very true. And a great point. I should take a note of that. I think I have, well, Zuber's got the shirts. I used inflation to get rich. Ask me how, or wealthy. The name from last week that I probably should have remembered. You ain't nothing but a hound dog. That's what you said. Hi there. Second live talk I've caught. More of a mindset question than real estate. Do you have an elevator speech to pull out when talking with kids about money and mindset? Today at the park, I ran into a 12-year-old boy who 3 times in a 5-minute conversation referred to how poor he was. I wish I'd had something to pull out and give him. Oh, so that'd be a hard one. If a kid's telling you how poor, that means that they're hearing it somewhere. So you're not really going to impact that, I don't think, with a kid that you meet. No one can hear a word until they're ready. And some people are never ready. I had a friend, I want to say dating, but I had a friend, and her teenage daughter had been around several conversations where we were talking rentals. She never took any interest. She never asked any questions. She never nothing. Like, I would talk cash flow. I would talk making work optional. I would talk buying the next rental. It was never of an interest to her. And then I was in my fourplex, and there's a unit who paid in cash because his computer wasn't working or whatever the reason was. And he brought over like literally a drug roll of 20s covered in glitter, but it was just a roll of his rent. And he goes, "Hey, I'm really sorry, I can't pay online this month." He knocked on the door. "Can I just pay you the rent?" And I give him a receipt. He leaves. My teenager's eyes were this big. "People just give you money?" And I said, "Every month." And the crass joke that everybody at work made when I had a job was that it's my welfare checks, that Dion has a bunch of money that comes in on the first of the month I didn't work for. And that got her interest. So I think if you're going to talk to someone who's younger, not a 12-year-old that you meet in the park, refer them to old Graham Stephan, old Meet Kevin, Minority Mindset. If they're interested in real estate at all, I refer them to Millennial Mike. Get somebody that's closer to their age talking about finances, because, and my elevator pitch, I think, to a kid would be, most people are going to tell you that you, and this is from Kiyosaki, get good grades, get a job, climb the ladder, make more money. And when you're young, most of us see that you make money to spend it. Like, look at 12, the kid probably wants a gaming system. Well, you have to make the amount of money to buy the gaming system. So we get early training on you earn the money so you can spend it. No one's talking about, if you take your money and you put it to work, you don't have to work for it. If you can find a way to put that into words, that in the conversation that the younger person can even hear you on, I'm going to answer your question with no. I don't have that elevator pitch. For the last 13 years, I worked at a truck driving school. It started with 6 staff. When I left, there were 60. I made work optional by buying real estate. Two people in totality who worked at that company ever bought another property. One of them retired about a month ago. Retired in August, so month and a half ago, I guess. So the people I interact with on a daily basis who saw me literally making work optional, still working there. Still going to be working there for 20, 30, 40 years, putting money into a 401k, hoping that Social Security is there. It's really hard to break that mindset. Matt 76, you're listening to the audiobook, and it's amazing. Thank you. That's the actual first time somebody said that they liked it, because I've actually been unsure. Like, I knew that I'm recording one rental at a time now. I've got the first big chunk of it done. I've got like 5 more chunks to go through. But it took hundreds of hours to put this and edit it and get it out there. And I was hoping my voice was better than the robot voice, but I expected everybody to come back and go, "Wow, you can't read. You're terrible." So if you're enjoying it, I like that. Thank you. All-nighter hider, Angel R. Or pay it off if you can use that credit productively elsewhere. And then Emily became a member. I appreciate that. My chat moved, but that at least shows me where to go. Bruce, howdy. Don't worry, your secret is safe with me. And I actually used your name today. It was those restaurants that get your name to get your food. They always laugh when they call it Batman. So if you're ever at a restaurant and somebody says, "Hey, Batman, your food's ready," I'm in the building somewhere. First time in the live chat and just subscribed. It's probably been asked before, but how do you determine something's a good deal? And if a property doesn't cash flow day one, do you entertain buying it? Welcome to the channel, Bruce. Thank you. That is a great question. I would not buy something that didn't cash flow, because I have a minimum cash flow. If you use a zero down, owner occupied, first time home buyer, or a VA loan where you put no money into the deal, it's not worth it unless it cash flows. So even the yield isn't the minimum. What I like to do, Bruce, is to learn what yield is in your area, the area average, figure out, and this is kind of the math in my area. 80% of the deals would lose money, so I don't look at them. 20% of the deals would make money. I figure out of those 20, what's the average? So, and then the goal is to beat that. It probably takes 60 to 90 days to learn your market, because you need to understand 3 things: the prices of the properties, your current interest rates, check with your lenders every week. And I have a strategy for getting the best interest rate from your lenders, and then know what your area average rents are. So if you know those 3 things, you'll be able to figure out your yield. And here's the math point, Bruce, which I'm going to point out at the 1 hour and 19-minute point if you want to come back and catch this again. Yield, or in real estate, we call it the cash on cash return, is a really simple equation. annual profit divided by cost to acquire. Annual profit is all of your rents that come in or charging for laundry or any income that you have on that property. Subtract principal, interest, taxes, insurance, and setting aside for repairs, maintenance, and vacancy. I do 10% for repairs and maintenance, 5% for vacancy. If you're going to use property management, set aside for that as well. So you take all of that out. What's left every month is your monthly profit, times that by 12 to get your annual profit. Cost to acquire is your down payment, closing costs, and immediate repair. So there's three things there. All of the money it took to get that place rent ready, buy it, close, and everything. Divide your annual profit by your cost to acquire, and that will give you a percentage. So if in my area, 6 to 8% was kind of average out of those 20 that would cash flow, I tried for 10 every time. So I'm trying to beat the average. And you have to study your market constantly when you're making offers, because if the area average drops down to where 5 is normal, now you start looking at 7s and 8s. If you're in where Lumberjack Landlord invests and he was getting 20 to 25% returns, you shoot for the 25 to 30s. Like, you're always trying to beat the average to make sure you're getting your, what he calls buck, best use of capital. So you're putting your money to its best work. So that's what we do for yield. But math is step one. If you know what you're looking for as far as your yield goes, then you know what properties to look at. But you're also going to be looking at it in a footprint. What area will you invest? And in that area, only go as large as your mental bandwidth can handle. Don't be looking at several different areas, or you'll not know the areas to avoid, the streets that you can't safely go to, the housing areas where the police aren't allowed to go by themselves. They have to go in as a team, right? You won't know all of that in a bigger area. So make sure your footprint is where you can handle the amount of data. Are there enough economic drivers? So you don't want to be investing someplace where if a port closes down or goes on strike, all of your tenants can't pay. So I like to invest where there's at least 2, if not 3 or more of these: a base, a port, a college, a hospital, a Boeing or Amazon or a big company's terminal, or a large population, 100,000 or more. So 2 or 3 of those or more, so that if the base closes down or the port goes on strike, you have other tenants able to pay. So maths, and then I go to, does the area have the drivers that I want? Do I have the bandwidth to know which areas to avoid? And then the third thing is I look at the aspects of the property that will help me limit tenant turnover. So I am looking for side-by-side small multifamily, because if they're over-under units, you're going to have noise complaints, or a plumbing issue can affect multiple units, right? So side-by-side, preferably with the garage in the middle, so they're not even sharing a living wall, right? I want washer dryer hookups in the units, because if they're using shared laundry or a laundromat, they're just waiting for someplace else to open up. I want, in my area, I like to have at least 2 bedrooms and a garage, because more space equals more stuff, less likely to move. I like fenced yards for each unit of the small multifamily, so that pets are more likely to be allowed. I allow pets because it also helps limit tenant turnover, because people don't like to move their animals. So like, that was a really quick, it went from from 1 hour and 19 minutes to 1 hour and 23 minutes. That was the breakdown on picking a property. Yes, we start with math, but then we look at all of the things that are going to make us successful over the long term. And thank you for joining the live. Hopefully that was worth you coming back. Lumberjack Landlord, Trucking Landlord. My channel has a discount code on the video I did on it. Awesome. Angel R. Thank you, All Nighter Hider. Been saving. Hate debt though. Yeah. Yeah. I would say I hate debt on cars and credit cards and that kind of stuff. I love debt on rentals. Wish I had more. Chester Williams, howdy. Good evening, and to Matt and everyone. Trucking Landlord, thanks Lumberjack. I'll take a look. 78,000 new agents have me nervous. Yeah, don't believe the hype. It's 87,000 new agents coming over the next 10 years, with 50,000 retiring. So yeah, you can make a meme and make it sound scary, but a lot of this was planned obsolescence that's being replaced with some growth. So yes, there's a reason to be concerned, but yeah, I have 6 more minutes. So I'm going to get to as many of these as I can. And then I'm going to be getting ready to take off and go to the Tacoma FI meetup tonight. I hope to see people there if they get a chance to show up. Lumberjack Landlord to Trucking Landlord. Agreed. The cost segregation company I found in 20 years was audited themselves 8 times and won them all. Even better is just making sure you do it right and they have people that answer the questions you have. Also, I pay, so check with yours. Yours might just automatically come with this, but my tax person was like $140 to pay for audit protection, to where if you get audited, they handle it. So if it's included, so you know you're protected, and if it's not, how much would it be? And for me, it'd be worth a couple $100 to have that. You probably won't get audited. I pay it every year. I've only been audited once, but literally 6 months of me just making sure they had everything that they needed. All-nighter hider, welcome Bruce Wayne. Happy to have you here. Awesome, thank you. Levi, howdy. Eli, howdy. Did Matt Lumberjack Landlord ever mention which oil space heater he used for his rentals? Hopefully he does below. I did on my winter products video, winter prepare video. Perfect. Sometimes it seems like people prepare for winter by shaving their head and not saying why in their live stream on Sunday. Matt? Angel R, yes, he's got a video coming out. James J, how do we become a member on YouTube app? So that's very frustrating. If you open up the app right underneath the name in this section here, there will be a join button for like 50% of the people who open it. For some reason, it doesn't show up on mine. I have a friend, it doesn't show up on hers. So maybe go to the website. I don't know. I would hope it would be in the app. It's supposed to be. I actually took a screenshot. I opened up like Meet Kevin's and he's got the join thing there. It seems to be glitchy. Bruce Wayne, thanks, Hyder. Awesome. 1920 Jefferson Ave. Thank you, All-Nighter Hyder. Appreciate that. Emily, howdy. Is there a number that you recommend saving up for the 20% down payment? Having a specific number is hard to save up for when duplex, triplex come in all kinds of prices. Thanks, Dion. Got it. I joined the Facebook group, but membership pending. Oh, okay. So yes, there's a specific number. Why am I not seeing it? Lauren asked to join. Confirm. There we go. Okay. So Emily, I'm sorry, I read those together. Emily, there's a number. So here's how it works for me. As you're saving, the more money you have for reserves and down payment, the more strategies and options that open to you. So if you're saving for a small multifamily and you're hunting every day and you're not finding one that is worth pursuing, you start looking at houses with ADUs. As your down payment grows, you can grow the amount that you're looking for. Once you've been investing for 2 years, I removed and completely eliminated the upper amount, because you can borrow, you can purchase anything you could save the down payment for. So I didn't want an upper limit. I basically want to look at everything. As you're saving, if you don't have rental income for 2 years, you're just increasing what you can look at. So it's not so much that I'm like, I want to save $20,000, then I'm going to buy it. It's when I had $10,000 to put down, this is what I was looking at. When I had 20, this is what I was looking at. Right now, so as your cash flow increases, so you're making more money at work, you either develop a side hustle, you start having cash flowing assets, you have the income snowball, that money starts to pile up. And I know it seems like a hard, like a terrible problem to have, right? But you start to think of, what can I do with this money? So let's say, hypothetically, you had $500,000 sitting in the bank. You've been saving now for a year and a half. You have $500,000 just sitting there. All of your cash flow is funneling in there. You can start looking at fourplexes in the $1 to $1.5 million range. You could start looking at buying a duplex all cash, cashing out later when rates make more sense. You can look at doing a BRRRR that you finance yourself, because the biggest risk doing a BRRRR is if interest rates are going up, you might not be able to refinance your money out. So if you took your $500,000 and purchased a property for $300,000 and then put $100,000 to fix it up, you now have a property that eventually you'll pull money out of with a refinance if rates ever become favorable. Like, all these options open up that just aren't there as you're saving. So as that savings amount increases, start looking at what other options open to you. Not so much, I want to buy a duplex, so I need to save $20,000. It's once you have $20,000, these are the type of assets you can look at. Once you have $35,000, you can add these other options. And as it grows, it keeps changing. And then I see Mad76. So Levi, welcome to Someday. Thanks for becoming a member. I appreciate that. Make sure I'm not missing anything here. Mad76, I'm having problems finding fourplexes in Kentucky County, KY County, Palm Beach, Florida. Kai County? I'm getting that all wrong. I'm struggling to make triplex numbers to avoiding spending money from my pocket to pay the mortgage. Any thoughts? So how are you looking for your fourplexes? Do you have one agent with auto searches set up? Are you doing driving for dollars? Are you looking at tax records? How creative are you being at finding those fourplexes? And then how far out are you willing to go from where you're investing? Because at some point, as the circle goes out, prices start to come down where rents don't really change as much. So there will be an equilibrium out there at a point. If you're house hacking, you're probably going to have money out of pocket for a duplex and sometimes maybe a triplex. With fourplexes, you generally tend to either break even or make money. I'm making a lot of money in the fourplex I'm living in. It's a lot of money to me. Just the one property is profiting like $2,500 a month. So yeah, there were some suggestions there on how to find them. I would make sure you have multiple agents with auto searches set up. I know you've probably heard me say this before, but searching on the MLS is nuanced. And in 10 years, I've only had multiple agents send me the same deal within a 24-hour period one time, give them a copy and paste the exact same letter of this is where I'm looking, this is what I'm looking for, this is what I don't want, and get all those searches coming in, and they generally send me different things. So do you have multiple agents? If you're looking on Redfin and Zillow, you're probably never going to find a property. The deals that I've closed on several months later, I see them pop up on Zillow or Redfin as pending. That's how accurate the data is in my area. So it's MLS only. Maybe contact wholesalers and investors in your area. I don't know if you get a chance, but Cody and Christian multifamily strategy here on YouTube. Cody has this, and Christian too, has this magical ability to go out, find the owners of properties, develop a relationship to learn from them, and then somehow get seller financing with no money out of their own pocket to buy sixplexes from them. So definitely a channel worth checking out on how they found their properties. Maybe a good question to even ask them how they found their properties. So I hope that helps, Mad76. Yeah, it wouldn't be buying if you had to come out of pocket unless you're house hacking. Sometimes when we house hack, remember there's two things that I do when I'm doing a house hack. Run the numbers like I put 20 or 25% down, so I'm comparing it to the same as the other properties. But run the numbers as if it's the year after I've moved out and all units are rented. So if you're house hacking and you're still coming out of pocket, sit back and go, what would this unit that I'm in rent for? What would that do to the numbers? But if you're buying a triplex or a fourplex that's still losing money, even though you don't live there, yes, those are deals to avoid. And in my area, 80% of the deals would lose money. 20%, 20% of the deals, most of them aren't worth pursuing. Once in a while, you find one worth chasing. Surf Marco, howdy. If I'm 6 to 12 months out from doing anything, should I still reach out to real estate agents to get MLS listing reports sent to me? Yes, have auto searches set up and tell them your timeline. Just say, hey, look, I'm not looking to do anything for this amount of time, but I want to look. It takes time to learn a market, and getting those things coming in kind of builds the muscle memory of looking and running cash flow. And just the more you do it, the better you're going to get at it. Transparency is important. Like I just told Mad76 to have multiple agents with searches set up, make sure they all know. Don't hide anything. This is a finite community that we're going into, and you're going to have a reputation that's going to last decades. If they know, then they can choose if they're going to work with you or not. But tell them, yes, look, I just want auto searches set up. This is my criteria that I'm looking for. If you find an agent that says one of these two things, you just move on to another agent. The first one that says, you need to sign an exclusivity clause with me to where I'm the only agent you're going to work with. Totally understand how a real estate agent should do this if they're working with home buyers, because home buyers are going to take up their time and go and look at a bunch of properties. Protect their time, do that. But you're an investor, you're just going to look at these auto listings when they come in. There was two things. And my memory kicked in. I'll remember by next week, probably. Yeah, I would set up auto searches early on and tell them, look, I'm not, and be very transparent. I'm not looking to do anything for this amount of time, but I want to learn the area. And you never know. You might go, I'm 6 months to 12 months away, and then you see something that pops up, and right at the beginning it says, motivated seller must sell, make offer, owner financing an option. And now you're making moves tomorrow. Like that just everyone else would be too, but maybe you can get the seller financing and have the deal before you're ready. So you're not going to see those deals unless you're looking. So I definitely would. And then I want to get to the rest of the questions, but I have to get to our meetup. I'm going to be doing some shorter live streams, and I'm going to take a couple of these last questions, so I might get to them in those 15-minute ones. I'm trying to make sure that there's a way for people who like the long content can watch, and then the people who like the short content can watch. So if I didn't get to your question today, let me try to come back and get some of these later. Hola, Jimena. ¿Cómo está usted? I think we're good for tonight. Thank you, everybody, for hanging out. I appreciate everybody who joined as membership. Remember, next week after the live stream, there will be a members-only live stream, which might be a Zoom format that you can join so that we can actually interact and talk to each other, which I'm also going to have on YouTube on a private stream, so that if you don't want to join Zoom, you can be a part of that. The topic for this video was, are you willing to be rich? And if you came in late and you didn't watch the beginning and you don't want to go back and watch the first 12 minutes, fix our mindset. Sometimes our opinion of wealthy people is so negative that we will subconsciously stop ourselves from becoming wealthy. Thank you all very much for coming. I appreciate it. Until my next video, thanks for coming to my Dion Talk.